Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Thursday, October 9th. The euro gained 100 pips in the overnight session to test the 1.3750 area, where the euro has peaked in the last few days. A hold above this resistance level will close the Sunday gap, something it has failed to do this week. In New York, the pair looked to finish relatively flat on the day after declining in the morning. In economic news, the German trade balance recorded a $13.1 billion surplus in August, beating market expectations. July was revised to $11.6 billion from $11.8 billion. The decline in the trade surplus over the year implies that German exports are hovering near the lowest level seen in the last few years. The euro is seen here breaking through the support trend line on the 4-hour chart. Volume was slightly lower today as the RSI bounced off the neutral 50 line. The pound made a new low during the Asian session, corresponding to the value reached at the beginning of 2006. The pair declined in New York but was off session lows in the afternoon. In economic news, house prices fell in September by 1.3% and by 12.4% from the year earlier. Economists had been expecting a negative 1.8% read. The UK trade deficit widened in August to negative 8.2 billion, larger than market expectations of negative 7.6 billion. The previous number was also revised higher from negative 7.7 billion to negative 8.2 billion. The UK's deficit on trade in goods and services was £4.7 billion in August, compared with the revised deficit of £4.8 billion in July. The cable can be seen in a downward linear regression channel on the 4-hour chart. 1.7 is acting as support, while 1.7400 can be seen as resistance. The Aussie strengthened during the overnight session as the market bought risk to recover almost every lost pip on Wednesday. The pair declined in New York but was also making up some of the lost ground towards the afternoon. The Aussie has broken below .6980 in late afternoon trading. The pair has created a no man's land between .7140 and .6980. The next area of support for the pair is at .6630. The CAD moved lower in the overnight sessions for the first time in 10 days, even as crude oil continued its decline toward an 8-month low. The pair rose in New York trading as oil moved nearly $1.60 per barrel lower. The pair is still nicely trading within its channel, with support seen at 1.1295 and 1.1090. The pair could range trade sideways this evening to reach the center line. The Swissy traded flat since the U.S. session closed, despite the trading in a 70 pip range. The pair was unable to break in either direction during the Asian and European trading hours. During the last 2 trading days, the Swissy lost more than 200 pips and the trend continued in New York. The Swissy has traded itself into a descending pennant formation. This pattern tends to break to the horizontal line, and if that happens, 1.1140 is the next area of major support. The yen gained 160 pips during the overnight session to trade just under the LFB S1 at 101.05. The yen has strengthened as the market is looking at risk, in line with the S&P futures, which pointed to a strong open on Wall Street. The momentum in equities couldn't be sustained in New York, and the pair fell from overnight highs. In economic news, orders for machine tools declined, reflecting the global slowdown as well as the domestic slump that recent reports have alluded to. New orders fell 20.7% from last year as companies reduced investments in new technology in the face of the economic uncertainty. The yen has tested many levels of support and resistance this week as the pair bounces around with equities. The RSI seems to be caught in another channel between the 30 and 40 lines, suggesting indecision. On the upcoming economic calendar, there are 4 top-tier releases scheduled for Friday. At 0700, Canada will be releasing their unemployment change and their unemployment rate, and then at 0830, they will release their trade balance. Also at 0830, the US will be releasing their trade balance. In Asian equities, the Nikkei lost 45 points or 0.5% to close at 91.57. The Australian S&P ASX tumbled 67 points or 1.53% to close at 43.20. In European stocks, the German DAX fell 126 points or 2.53% to close at 48.87, while the UK FTSE lost 52 points or 1.21% to close at 43.13. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 85.79 after losing 678 points or 7.33%. The S&P closed at 910, down 74 points or 7.61%, while the Nasdaq finished the day's trading at 1645 with a loss of 95 points or 5.47%. Crude oil for November delivery was down $4.27 or 4.83% to close at $84.60 per barrel. Gold for December delivery was recently trading up $12.90 or 1.43% to close at $916 an ounce. In Treasuries, the yield on the 10-year note rose 12 basis points to 3.769%, while the 2-year note's yield fell 0.8 basis points to 1.547%. Overall, the negative tone established by Mr. Paulson's speech late Wednesday afternoon looked to have carried over into the credit markets and Wall Street. The Treasury warned against expecting a quick resolution of the credit crisis and said that more banks could fail. Also helping to dampen the sentiment was the mostly lukewarm response to the unprecedented and coordinated global easing of policy rates by the major central banks. The reduction of rates at this point is unlikely to have an immediate effect on borrowing costs and credit availability as highly leveraged financial institutions continue the process of deleveraging in the midst of a liquidity and solvency crisis. Rather, the move was more symbolic in terms of attempting to shore up the severely damaged sentiment which has pervaded global equity markets. In economic news, new claims for unemployment fell by 20,000 from last week, but the 4-week average rose to the highest level since October of 2001. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.